This is Tom Asper with the Viper Report. As I mentioned last week, I'll be out for several weeks having back surgery. That doesn't sound like much fun, but I think you will enjoy in the interim that I'm able to send you Jerry A's market analysis a couple times a week, if not more, and I think you'll find it very informative and a very interesting perspective on the markets. In addition, you'll get to see Jerry's interesting artwork that usually is encompassed lots of bullet points here. That's important. Read all those. Like for this first page, noted that, a couple of worrisome developments, futures below their pivot and the VIX above its pivot. Okay, and the very negative breadth, so there's a chance of some internal damage, which will depend on the action early in the week. Markets analysis and data he provides in NASDAQ, largest drop since May in the S&P, etc. The Dow, breadth trend is negative, and the VIX, as I mentioned, and the NAAIM investment survey. So, another summary here. Once again, the key levels. If you look at those every time, write them down if you need to, but they'll be important as we enter trading in Monday. You can see that he has the ES pivot map, shifted from bullish control to pullback watch. Pullback watch, you can see what happened, in Friday's session, and you can see that, if it goes a bit lower, then it signals more trouble for the market. That's also consistent with the VIX, gives you some, analysis of the pivot levels on the VIX, which are important to, watch. So, and also if the VIX drops back below 1890 in Jerry's work, that'd be great. However, if we do break below the pivot and the level at 73.35, that's the next major support. The various factors here, and then goes into some of his charts. This is a very nice chart. He's created a 2-day futures chart. You can see the big reversal, on Friday. You can see we have stark bands. You can see that, that are oversold and overbought conditions are illustrated, as well as a small divergence here as the futures have made a series of new highs in the past week. Each section often has some conclusions, and that you'll need to know for the week ahead. His message from last week, you may have remembered, was sort of like, this is not throw caution to the wind, be very selective in anything you do, and so the M1 for the futures, 72.50. A drop below that, would suggest trend damage. He does some interesting work on the breadth. He has a 3-day, a 10-day, and a 20-day trend lines, that are all in the same graph. So, you can see that, a week ago, there was a very strong day of breadth, but equally negative on Friday. It was the most negative day going back 2 weeks. He also runs moving averages on these numbers, so you can see they're all negative and declining. 21.28 decliners on Friday, 6.29 advancing. And that's is a consistent, as he says, kind of breadth damage that says the sell-off. These numbers indicate that there was real participation on the downside, not just light profit taking. Of course, a lot happened last week with the inflation numbers that were much hotter than expected, and up until Friday, the market had not reacted. He looks at the sentiment. This week, we're looking at the NAAIM, and they were pretty well invested at 96.67. By midweek, they were down to 77.34. So it's given up some of the froth, the FOMO that was there. What we do from here, how low it goes, will tell us more about the sentiment, similar to the way I use the AAII number, which Jerry also discusses in most reports. He also does cover the address and some of the factors that are likely influencing traders as well as investors during the week. So a shift in the news, really. The biggest decline since March in the S&P 500. The seesaw battle in Iran oil. More sort of uncertainty about what really transpired on Trump's China visit and how that'll impact. Really is on top of the spot gamma option data, and oftentimes you can really illustrate what levels are important in the futures based on the options. He's much more versed in this than I am. NVIDIA, of course, reports next week. Has earnings on the 20th, so it'll be important. Down here going into next week, once again, it reiterates some of the key levels as well as the headlines we should be aware of. And given the way things are going, that could change by the time this video is released. Important events on May 19th, VIX expiration, not a lot of data after the CPI, etc. last week. High impact earnings, Home Depot, because it really shares some economic trend analysis as well as consumer, and of course NVIDIA, which is widely watched in terms of the health of the tech center. The last couple pages are really ideas and based on what he sees in sectors in terms of which ones are maybe moving out of favor as well as moving into favor. So he does quite this data, and conclusions are derived from some pretty extensive research, searching pretty much, all available options on some of the stocks he likes. So strong watch list, Lumen, had a monthly trigger, and it's had a decent pullback. CVX, CL, watch list, less strong, but also option bank strength, information technology, semiconductors, had a 4H trigger overlap, Lumen again, and also SLS, healthcare biotechnology, emerging setups. These are some stocks that he's watching. So for stock traders, here, check out the symbols on all these pages and pull up your charts, look at their relative performance and their OBV. Of course, start with a weekly, and that'll set you up some good opportunities to trade in the next few weeks. Cybersecurity, ZS and CRWD also show up. Some of the most exciting work he has done with the sector performance. Zooming in, so he's looking at, this is updated as of the 15th. Energy strength continues. The little purple line here reflects where what the change has been since, in this case, the last report, which the mid-brief. So it's doing better than that. So healthcare is also doing slightly better. Consumer defensive is doing worse. Because the gap here between the current level and where the level was in the last report. Technology turning positive. Okay, so it was doing a lot better than it was midweek. And then he drills down into hardware, storage, building. Okay, building a turn, system software mixed, and NASDAQ tech, internal rotation. And then he looks even more detailed down in here, in terms of tech split, software, internet, hardware, etc. So those are the improving ones, including financials, where you can see that, where it was last week was well above where it is now, but he still sees improvement. Communication services, negative improving, rotation out. So he's been saying that in rotation out for a while now. So all three of these are in that category. So of course, like you would in terms of looking at the DTS readings, you'll look for that a change and an improvement. He explains his updated rotation bars, and the key is here is that he's looked at my RS analysis. It done some interesting things with it. I think they're discussed in that handout I sent out last week, an intro to his approach. So sector report, more selective still. It's not like it was, earlier in April when it was sort of gung-ho. It's really a mixtape. And then also in the themes report, he goes into all the groups there. So cybersecurity turning positive. That's ZS, Crowd, and PANW. Digital manufacturing 3D, XMTR, MTLS, and DDD. And digital assets is starting to weaken. Internet platforms, didn't do that great on compared to where they were earlier in the week. You can see a big difference there. Digital assets got better. Okay, and rotation out. So if you didn't see that report on the Viper report, he did an interesting report on strategic materials. Says it's negative but improving. So that was a pretty full of information in that report, and some stocks you should keep an eye out. Quantum computing. He says there's still rotation out, but there were some interesting signals on some of the tech giants like Microsoft in the past week. So theme part also argues for pockets rather than blanket aggression. So look with those ones that are improving and emerging, as opposed to ones where you're seeing rotation out. And of course, the week ahead, as any good technician, you want to look at if you're cautious, what would make you turn more bullish? Okay, reclaiming that projected pivot at 74.40, and the VIX sleeping below the projected pivot 1916. The 2-day divergence, we mentioned that chart. So that can be either resolved by a deeper correction or by some sideways action. And of course, oil, Iran, and NVDA, will likely determine a lot of the action in the week ahead. As I said, these bullet points are important. The baseline plan is simple. Let Monday show whether the 130-minute structure can keep holding, while the higher time frame charts suggest. If the weekend news or pre-open charts change material, he could have a tactical update. And these are the sources he uses for everything at the time, pretty much when he pulled the data from this. Really impressive. And of course, the disclaimer, this material is provided for educational and informational purposes only. Not investment advice, not a recommendation to buy or sell any security, and certainly not a guarantee of future results. So if you have any questions about Jerry's report, send them to me at tom@Viper Report, and I will send them off to Jerry and look for his feedback. So we'll be saying the weekend watch list out later, and an abbreviated version of my reports before Monday's open. Thank you very much, and hope you enjoyed it.